The following segment is sponsored by M&M Income Tax Service.
Double checking your tax return is never a bad idea, and that's especially true this time around with all the changing tax codes. You could find out you're entitled to a bigger refund. Joe Mahaffey is here with us from M&M Income Tax Service. Good morning, Joe.
Good morning, Margaret, and thank you for having us on again.
Absolutely. So the tax code changes that we discussed last week have created a lot of challenges for taxpayers and tax preparers. How has that impacted our tax returns this year?
Well, first off, let me say that changes that Congress passed in December actually saved tax season for millions of taxpayers.
Great to know. When it comes to double checking your returns then, you say there are three primary items worth looking at. Let's start with the new refundable credit for self-employed individuals. What do we need to know there?
All right, Margaret, for self-employed individuals, small business, there's a refundable credit tied to their inability to work normal hours or days due to COVID-19. They did not have to actually have COVID-19, just their normal work schedule was interrupted by quarantine, or maybe their children's schedule was interrupted, and they had to actually stay home and watch their children. It's a substantial credit for self-employed taxpayers who qualify, but it's brand new.
Good to know about. Next is the earned income credit calculation. You say this is where Congress saved tax season for millions of taxpayers. How's it work?
Absolutely. We can actually use last year's earned income number to calculate the EIC. It's a credit tied to the children you claim on your return that generates big refunds for taxpayers who actually qualify. We have seen many taxpayers who had mostly unemployment as income, and unemployment doesn't qualify them for EIC. So you must make sure you're using the best number to generate their biggest possible refund, and that could be a number from last year's tax return.
Okay, absolutely. And you say that there is a third major area worth double checking. It has to do with retirement distributions. What do we need to understand there?
Yes, many taxpayers under age 59 and a half received early retirement distributions from their 401k plans. What they need to understand is the distribution is taxable, but it's not subject to a normal 10% penalty. The good news is they can actually spread the taxability out over a 3-year period, which generally means a big refund this year, but unfortunately they will have to pay tax on 1/3 of the distribution over the next 2 years.
I know there's a lot to understand about it, and I'm glad you're the one doing it. Are there any other major items that you say are worth double checking?
Absolutely. One of the biggest relates to people who received advanced premium tax credits to offset the cost of monthly health insurance premiums through the marketplace. If the taxpayer makes too much money, oftentimes they must repay the full amount of the advanced premium tax credit. This can be thousands of dollars. And the key here is there are several ways to work the tax formula to minimize how much the taxpayer must repay.
All right. And I understand M&M Tax Service is offering free double check. Tell us about that. That sounds like a great thing.
Absolutely. Whether you prepared it yourself or had another tax preparer complete it for you, we feel with all the changes, everyone needs to get their tax return double checked. We have been finding huge errors on lots of tax returns prepared by others. So bring your stuff to us and we'll double check it for you for free.
All right. Fantastic. M&M Income Tax Service has 25 locations in the upstate. People can find you online at mmtax.com, or they can call the number on screen right now. Joe, thanks so much for being here. We look forward to having you back again really soon.
Thank you, Margaret.